Ideally, the Central Bank of Kenya's Monetary Policy Committee meets once every 2 months. In light of the present emergency, however, the committee is set to have its third meeting of the year just 1 month after it had its last meeting. Analysts argue that the rising unemployment occasioned by job losses and slowdown of the economy's growth momentum will likely be the key issues topping the Monetary Policy Committee's agenda as it sits on Wednesday.
We are seeing that there are some risks in the economy that are skewed to the downside. One of them is on the economic growth. We are seeing that there is an output gap which we expect in the economy, whereby the actual growth will not perform as per the potential growth that had been priced in by the policymakers.
We expect the Central Bank of Kenya to maintain its policy rate at 7.25%. This would provide room for monetary policy transmission of previous rate cuts and also for the fiscal stimulus measures recently announced by the government to take effect.
Analysts further argue that with relatively low inflation at just 6% in March 2020, the central bank still has enough room for easing monetary policy.
We still expect an accommodative monetary policy stance from the Central Bank of Kenya in light of the evolving coronavirus pandemic. And this would be supported by a moderate inflation profile, given the lower international oil prices and muted demand pressures.
The single mandate of the CBK is on the price stability, which is on the inflation. We expect co-inflation because of the lack of demand pressure in the economy. We expect it to remain subdued, around 1% from the 2.2% that was last month.
Wednesday's meeting will be coming at a time when the shilling has been under immense pressure, breaching the 107 units to the US dollar this week. Many will be keen to see what the central bank has to say about the trend in the foreign exchange market. Julian Amboko, NTV.
Now, the cost of personal protective equipment could go down in the days ahead. The Kenya Revenue Authority now says that it has finalized updating the Simba system to reflect changes removing value-added tax on personal protective equipment. The completion now allows traders to effect the scrapping of VAT on personal protective equipment, something which had delayed despite the President signing the tax laws amendment bill into law late last week. KRA says it had to await the publishing of the tax laws, that's the Amendment Act 2020, by the government printer as required by law before effecting the new changes. While the banking sector continues to take a hit from the COVID-19 pandemic, with the latest development being the planned closure of selected branches by Standard Chartered Bank. The bank has indicated to its clients that effective May 1st, 2020, it will close 8 branches for a period of 3 months. Amongst the branches affected will be Koinange, Harambee Avenue, T-Mall, Two Rivers and Upper Hill. Standard Chartered Bank's share closed to Tuesday's trade at 187 shillings and 75 cents, shedding 3% compared to Monday's close.